buying a 2000 or 2005 or 2000 built multifamily asset, I feel like is a little harder when you're newer in the game. The brokers have their relationships with guys they know can close and can perform. Um, we're creating value by building and developing, where we take the multifamily brokers kind of out of the equation for the time being. And now I'm having brokers call and say, "Oh, like we noticed, you built this one and built that one." So as we grow and build more properties, I feel like more opportunities will present themselves to acquire.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Aaron Palushaj is a former pro hockey player. He's now developing ground-up multifamily in Metro Detroit. Aaron, welcome to the show.
Sam, thank you for having me.
Hey, man, the pleasure's mine. Aaron, there are 3 questions I ask every guest who comes to the show. In 90 seconds or less, can you tell me, where did you start, where are you now, and how did you get there?
Started my real estate journey while I was still playing. So 6-7 years ago, I started doing some ground-up spec homes with my dad. So did a few of those and kind of got the itch to get more into real estate as my career winded down. Yeah, so developed 2 smaller ground up development projects in the multifamily space in Metro Detroit, and we are under contract and have plans for about 200 more units in the Metro Detroit area. Have also got asked to join as a minority GP in a large multifamily deal down in San Antonio Metro. So that'll be pretty exciting.
You got your hands full. So how long ago did you quit playing professional hockey?
About 1.5 years ago now.
Okay, so 1.5 years ago, you quit playing hockey. You said, "All right, I'm hanging up. I guess not the cleats, but hanging up the skates in this as it is. Hanging up the skates here about 1.5 years ago, and you had already been doing some. You said some spec homes with your dad. You come back now. You lived overseas, is that right? Okay.
Yeah, my last 6 years playing overseas.
Playing overseas, that's super cool. I mean, most of the time, I would imagine that a player of your caliber would come home and you go, "Okay, what's next?" I mean, how did you develop the thesis and just say, "All right, multifamily is it," and then not only that, but then have the I guess the bandwidth, the knowledge, the team to then go out and just start building ground up multifamily. I mean, that's like next level for most people.
Yeah, granted, they're smaller the first few projects, but and I also had my dad who serves as the GC for the company. But I knew that I wanted to do something after playing, regardless of how great my career was, or if I wanted to take a year or 2 off. Just not my personality to take time off. So I was like, "Hey, what do I want to do?" And I always loved real estate. My dad was in the restaurant industry and also did some commercial real estate kind of my whole life growing up. Never scaled it to a point where it was his full-time job, but I was always intrigued by going to the job sites and really liked it. So had that view of real estate, and I just diving deeper into what I wanted to kind of focus on. Did a little bit of some flips, some ground up spec homes, and I realized I wanted to focus on multifamily, kind of that small to mid-range multifamily, which I think gets overlooked by some of the big players and maybe is a little bit too big for some of the small mom and pop shops.
Small to mid range.
Yeah, so like we did our first was a 12 unit, just did a 6 unit townhome style development, and now we're planning a 72 unit, an 88 unit, and then 14 and a 32 unit. So kind of between that like 10 and 100 unit range is where we're playing in right now.
What questions did you have and how did you answer them? You said, "Okay, I want to do multifamily." What were those?
Where I wanted to be. It was easy for me to say, "Okay, I grew up in Metro Detroit. I know the market's really well there, but is there a need for more multifamily housing?" And those are some of the questions I asked myself, because you look at some different markets. There's a lot of markets that are like, "Wow, so-and-so is in this market and that would be awesome." But you kind of have to stick with, we have boots on the ground in Michigan. We have our trades we've built relationships with, and my dad's built relationships with over the years. So, and there's a need for multifamily housing. So all of those combined, we want to make sure we focus on the Metro Detroit for now. And then before we start venturing out to the west side of the state, and then a little bit more in some of the other Midwestern cities.
So someone such as myself with zero development background, I'm not a developer. I've never developed anything. I mean, to me, that just sounds a little bit overwhelming out of the gate. It's like, okay, we're going to go develop. I see a need for, smaller multifamily projects here in Detroit. What was your next step? What did you do to go out and find the parcel of land that made sense? How did you then, build, like you said, you had a 12 unit and then you moved to a 6 unit townhome. How did you figure out what product fits in the right locations? Can you just give us the kind of skinny on that whole process?
The market where we have the 18 units, we know really well. So there was a piece of property that had been eyeing for a while. It's right next to the park, right downtown, about 20 minutes north of Ann Arbor. And that property, my dad had brought it to my attention years ago. And he's like, hey, this could be a good opportunity to buy and hold on to. And eventually when we're ready, develop. So after pestering the seller for about 3 years, that property finally was sold at a really good price. And we just, figured what could we put there? And a mistake I kind of made early on in that process is I was like, 12 units sounds like huge for the first one. But now I look back, I'm like, man, I think we could have won another story and we probably could have had 6 more units. It worked out. It's a great performing asset for us. But looking back at it, you think of things as like, oh, wow, 12 units is big. But I think the point of like going bigger earlier is definitely holds true in that development.
Yeah, it's funny you say that. You look back on a lot of these projects. At least I look back on a lot of projects I've done. I'm like, oh, similar thing. Where you go, especially starting out, I was doing mostly rehabs on houses. Like, how many of those could I have just not just done a cosmetic rehab and made it all nice and new, but added a second story, done. I mean, you name it. It could have really changed the trajectory of a lot of those projects and the final payday that came out of them anyway. Are you holding these long term? Because you mentioned these are performing well. So are you guys building them, filling them, and then what's the plan?
The plan is in Metro Detroit is build, rent them out, and then refinance. So recapitalize. The nice thing about ground up development, it's a long process, and you need a decent amount of capital for staying power. But when you do it right, there's a lot of equity built into developing. So what we found is lease it, operate it really well, and refinance a large chunk of the initial investment and redeploy that into other projects. So that's kind of the model right now with the smaller mid-sized multifamily. And it's worked really well in the first couple, and we're looking forward to seeing that through on these larger ones.
Yeah, absolutely. Talk to us about the equity side of things. All right, so I'm an international hockey player. That's what I've known and done for the bulk of my career. I'm coming back to Detroit. I'm going to start building multifamily. How did you raise capital? If you raised capital, maybe you guys self-funded it. Hey, I don't know, but tell me on that. How did you guys get the equity portions of these deals across the finish line?
Yeah, fortunately, was able to self-fund the first deal.
Good for you.
So yeah, and very fortunate because not everybody's in that situation. But
Right.
we did raise funds for the second deal. Was able to. The nice thing about having an in-house and vertically integrated kind of firm is we built 6-unit townhome style apartments in about 9 months and recapitalized in about 11 months.
Wow.
From the time we broke ground. So and these are both long-term agency debt, 10-year loans. So take the whole equation of, okay, what the heck's going on with the market right now? I don't want to be in floating bridge debt, and maybe you sacrifice a little bit of the proceeds from the refinance, and a little bit of the interest rate, but you're locked in, and it's you're conservatively locked in for 7 to 10 years, 10 years in our case, and you're making a good solid return.
Right, man, that's awesome. I love that. Okay, so vertically integrated firm. I mean, did you guys build all this all at once? And maybe I'm missing part of the story here where you say, hey, my dad's a general contractor. He was running spec homes. He and I built some spec homes along the way. Now, you guys have a vertically integrated property management firm, general contractor, the capital side. I mean, you've got all this built in under one roof now.
Yeah, we do. We kind of, our legals, quote unquote, not in-house, and our tax advisors are not quote unquote in-house, but we built a team kind of where it's vertically integrated from the aspect of where we go out, find the properties, raise capital, finance the properties, build it, and we manage it. So eventually would like to get everything in house and under one payroll, but that might be years from now.
Hey man, and you've done this all in a year and a half. Is that right?
Yeah, kind of. The 12 unit I started developing while I was still playing. So it was about 2019. So I had a year and a half left in my career, which I didn't know was going to come to an end as early as it did. My wife got pregnant and decided Europe was out of the equation.
Right. Got it. Okay. But still, it's still pretty rapid growth. That's impressive. Well done. Here's some questions for you. What have been some of the major challenges you guys have faced in scaling your company?
How long it takes to develop a property, and the amount of money. So there was one property that we had under contract for about 6 months. Spent a bunch of money on it. The city was really looking forward to the development. We go in front of the planning commission after spending around $50,000 and a lot of time, and they're like, you know what? I don't think we're going to approve this project. So it's just a learning experience. It was close to some of our other two assets in the downtown, and it would have been a great project, but didn't work out. So it was a learning lesson. Like, hey, it's a long process. You need a lot of capital, and if a city says one thing, like until you get the site plan approval, you're still you're not in the clear.
How would you protect yourself now? Maybe in a way that you didn't do it then.
Well, I feel like we protected ourselves in a way where we didn't purchase the property. So I would definitely suggest, put the property under contract. Sure, there's going to have to be some at-risk capital when you're developing. That's just the name of the game. It's hard to mitigate that risk, but what you can do is you don't want to close on a $700,000 property and then sit there and be like, oh, well, I could rent out the two older houses for $1,500 a month.
Yeah, no, absolutely. Yeah, absolutely. Getting the, and I'm not even sure the right terms, but getting it approved before you buy it is, I'm sure there's ways you guys write those into your contract. Is anything else you would do differently such that you don't, in this case, lose 50 grand on a project like this?
Possibly engage the city planners a little earlier in the process. It was zoned properly. There was no wetlands, so we did all the due diligence. And what we try to do is spend as little capital up front as possible, and then as the process goes on and you get to try to get it to full site plan approval, there is a decent amount of money that needs to be spent. But I would say engage and have more of an open conversation with the city planners to see if this is really something they want.
Well, I mean, was that it? Was that for whatever their motivation or reasoning was just it wasn't the flavor that they wanted of the day, and they just said, "Nah, we're not going to do that."
Well, I think that they liked the project. I think they would have approved something for fewer units. It just didn't pencil for our underwriting to develop. It was too expensive of a property to develop. Half of the units that we were told were going to get approved, or at least really considered.
Got it. That's man. That's one of the challenges I think maybe that you've told us about here in development is that it's an expensive process. It's time intensive, and you make it all the way to where city planners look at it and they go, no, we're not doing that. But yet you find reasons to be on the development side versus on the buying existing stock side. Can you kind of tell us why that is?
Truthfully, as a young company and as having retired about a year and a half ago, buying a 2000 or 2005 or 2000 built multifamily asset, I feel like is a little harder when you're newer in the game. The brokers have their relationships with guys they know can close and can perform. We're creating value by building and developing, where we take the multifamily brokers kind of out of the equation for the time being. And now I'm having brokers call and say, oh, like we noticed, you built this one and built that one. So as we grow and build more properties, I feel like more opportunities will present themselves to acquire some existing. We're not necessarily looking for like the 60s, 70s, 80s built, just because we see how when you build a good product, how little maintenance needs to be done to it as a newer property.
Man, that's awesome. That is awesome. Cool. So you guys are building new product. Now you're doing this mostly in Detroit, but then you said now there's some new opportunities you're looking at even out of state. What's taking you out of state, and why is that a compelling opportunity?
As our investor database grows, they're looking for possibly some more opportunities and options, and partnering with really seasoned operators in the Texas. I like Texas. I like a lot of the Carolinas out west, just like everybody else, right? So having an opportunity to join on a multifamily development. This will be like around a 300 unit, and it's still early on. So we're probably a year and a half out till we break ground. So having that opportunity, I think I couldn't turn down. So, and it's the amount of time and energy dedicated to that project and that property will be a lot less than doing our own. So, and it'll be also a learning experience for the larger.
Yeah,
property.
for sure. And obviously you have a lot more development experience than maybe what a lot of other people such as myself do. And so this is going to sound like maybe I've been asked this question in an awkward way. I can't think of a better way to ask it, but it's what skill set do you feel like you're bringing to the table that the out-of-state developer is saying, hey, we'd love to bring Aaron on the team because he's going to help us with X? What is that?
There could be many reasons. Whether you sign on a loan as a guarantor, whether you help with due diligence, you can't be just capital raising, and it all depends on how the deal is structured. But different scenarios. In this scenario, it was the quote unquote expertise in developing a ground up property. Even though they're small, it's just they're different unit count and different numbers. But you develop a 12 unit, they're still all the same foundational issues, all the same everything that it takes to develop a 300 unit.
Yeah, I was going to say, is there really any difference other than the dollar signs attached to it?
I don't think so. Again, I haven't developed a 300 unit property, so but from everybody I've talked to that has, they said go bigger sooner because really you're putting so much of the same amount of work in that you need to put 10 of those buildings up or 20 of those buildings up.
Right. Yeah. And I guess you're only limited then by capital and available labor at that point.
Yeah.
That's awesome.
Yeah, cool. Exactly.
Rewind maybe a year and a half or 2 years or however far back you want to go. What is one thing you feel like you've done really well that other people should emulate?
Networking. Just talking with as many people as you can in the space, really immersing yourself in what you want to do. I listen to a ton of podcasts. I self-educate. I haven't joined a mastermind, but I've narrowed down a few of them. And I think networking is huge in this business, as you can attest to. I'm sure everybody can say your team is the most important thing in this business, and it could be your internal team or your advisors or your mentors.
Yeah, no, that's absolutely a great answer. And if you could rewind however far back you want to go, what's one thing maybe you would do differently or a pitfall that you could help our listeners avoid?
If possible, I would, in my case, I should have, and I would have loved to have invested 12 years ago when I first turned pro. I was unaware, like many of us, that you could invest in multifamily deals. I just thought, oh, sure, I'm making okay money playing professional hockey, but I can't invest in these big multifamily deals. So I would go back and tell myself like, hey, invest a little bit of money in it. You could learn a lot from a great operator. Maybe find a couple operators in different markets and just learn the ropes while you're making a pretty decent return.
Yeah, absolutely. That's a story for us all. I think is the invest. What's the phrase? It's like, when's the right time to invest? The best time to invest was yesterday. What's the second best time is now. It's like, okay, I get it. No, that's really cool, man. And going from, a professional hockey to real estate, what's that conversation been like with former teammates, if at all, when they're like, hey, wait, Aaron, you're going into what now? Like, you played hockey for a living. Now you're a multifamily developer. How's that work?
As you can imagine, a lot of interest from buddies that I played with, because a lot of them are starting to get to the tail end of their career, and they're trying to figure out, okay, what do I want to do? And some are very few are going to be set for life, where majority of us will have to do stuff after hockey. So I just try to be completely transparent and open with them, and whether they want to invest eventually in a deal that I have, or just want to be a springboard for them and kind of like help them figure out their path, whether it's single family rentals, fix and flip, multifamily investing, self-storage. Just try to shed light on what the knowledge I've gained over the last few years, and help them out any way I can.
Oh, that's cool, man. Aaron, I absolutely love it. What a great story. You've gone from a professional hockey player to now a multifamily developer, moving into a nationwide multifamily developer, I guess, in its own right. Aaron, that's a really cool story. Thanks for taking the time to share with us today. I think it's fantastic. You've gone from professional hockey player to now nationwide multifamily developer in its own right, or at least multi-state multifamily developer. I think that's fantastic. And you've taken the bull by the horns. I mean, just a couple short years, you guys are doing some really cool projects. You found your own niche to really carve out. And that's loads of fun. Thanks for sharing with us some of the risks that we see in multifamily and not multifamily, but in development, but also some of the opportunities that you're finding as well. So thanks for taking the time to come on the show today and educate myself and our listeners. If we do want to get in touch with you, what is the best way to do that?
First of all, thank you very much for having me on, Sam. I appreciate it. You can always send an email to Aaron at Palush, Paloosh, capital.com. We're in the process of updating and building out our website. So that's the best way. I'm on and off LinkedIn as well. So email is probably the best way to get a hold of me.
Awesome. We will make sure we include that there in the show notes. Aaron at palooshcapital.com. Aaron, thank you again for coming on the show today. Do appreciate it.
Thank you very much.